Hey guys, welcome to the Silver Report. Here we are, it's Monday, April 3rd, 2017. We have gold currently trading at $1,253.20. Silver's trading at $18.29. And let's get right into some of the economic factors that will be playing a part into the price of precious metals. It almost seems as if the world has forgotten that March 16th, 2017 has already passed. And what has taken place is that the U.S. government is not legally allowed to borrow any more money to cover these budget deficits until Congress votes to raise the debt limit like it has every time in the past. And now, one thing that a lot of people are neglecting is the fact that now there's announcements, now there's tweets that we need to figure out a tax plan immediately. Now, along with this tax plan, this bargaining chip, no doubt, will be a spending bill. A bill that's going to allow the government to continue to raise its debt ceiling. Now let's just take a look at some facts about just what has taken place, because 200 years from 1790, when the government of the United States was established, to 1980, it took 200 years for the federal government to accumulate $1 trillion of debt through deficit spending. Largely, this all began from 1971. And this debt, there was some down, it happened through World War II, but we were able to pay this debt down. Now, what took place after the departure from the Bretton Woods Standard is the fact that we were no longer able to pay this debt down. In fact, the debt was required, increasing the debt was required in order to pay the interest. If you've checked out Mike Maloney's The Secrets of Money, what we see is this debt-based system. We have to continuously increase the amount of currency in circulation in order to pay back the debt. So that means, in a 20-year period, from 1980 to 2000, the national debt grew by $5 trillion. You see, the problem that this is going to continue to happen until it completely collapses is because it is a systemic problem. It is a Federal Reserve problem. Then during the 8 years of George W. Bush Republican administration from 2001 to 2009, the debt doubled to around $10 trillion. We also had the great financial crisis during that time. Over the 8 years of Barack Obama's Democratic administration, the national debt doubled once more to just short of $20 trillion. Let's put this in perspective and how it affects you. The taxpayer cost of this national debt, the United States gross domestic product, the market value of all final goods and services produced during a year by the citizens of the United States, is estimated to have been about $18.6 trillion in 2016. That means if the American people were to devote last year's entire national income to paying off the federal government's accumulated debt, it would still fall short by nearly $1.5 trillion. With an estimated population of around 325 million people at the end of 2016, the per capita financial burden of the national debt comes to around $61,550 per person in the United States. About half of the U.S. population submits and pays some amount of tax to the federal government. This means that per capita burden of the national debt for those submitting and paying federal taxes is almost $123,500 per taxpayer. Of course, in reality, many pay no or little net taxes to the federal government, while others pay far more. This number at least gives us a sense of what it would cost each of us on average if we were to try to pay off the national debt in one lump payment. The debt limit, and what we're really facing here, the federal debt and statutory limit March 2017, is the fact that we have an unpayable, unsustainable debt. Of course, the Federal Reserve, meeting their goals, sees that now the United States has been brought to their knees. They're coughing up blood. They want to raise the interest rate on borrowing money. And so now this debt obligation is becoming more and more. In fact, it's as if someone just dropped a pound of sugar in our gas tank. What we're really and quickly waking up to, despite this illogical 0% interest rates for years that we've been going through, negative interest rates over in the European Union for years, free money, free money. It was an encouragement to have people borrow. And so we borrowed this free money. And now, despite any economic changes, any changes in the economy, any hard data suggesting that the economy is doing well. In fact, the Federal Reserve has been discussing relieving their treasure trove of toxic mortgage securities to begin to liquidate them. This is going to crash world markets. And this debt, their goal is essentially to crash the United States economy. And it's unavoidable. It's unavoidable at this point to ever go back. This level of debt, it's impossible to go back. What we are facing is a certain and brutal crash. That's what this channel is about. Silver and gold, to protect yourself from the coming dollar apocalypse. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you guys all so much for stopping by. As always, stay safe.